All right, everybody, we are back with another bull versus bear case. This is a series I started a few weeks ago where I go over the bull case, the bear case, and my overall thoughts on a company, but the objective here is to get it inside 5 minutes. This has been a very popular series, and I do choose the stocks that I'm going to go over next based on the comments down below. So like the video, subscribe to the channel, head down below and drop a comment what stock you want me to go over next. In this week's video, I'm going to be going over Toronto-Dominion Bank, which is a bank that has faced some very heavy pressure over the last while. It's got caught up in some regulatory issues, some anti-money laundering issues. I'm going to provide an in-depth thesis in under 5 minutes. Now, before I start the video, everybody, that free report is down in the description. It's 3 of my favorite options for 2025. I've had this report out for a few years now. These 3 stocks have done exceptionally well. They've outperformed the S&P 500 on a 5-year basis, a 3-year basis, a 1-year basis, and they're actually even up nearly 20% this year on a drawdown of 10% on the S&P 500. You could have got this report absolutely free in the description for a couple years now, but it's definitely not too late. So head down below, grab that report, and let's start the timer up and get right into the video. So Toronto Dominion Bank, quick overview on what the company does. This is the second largest bank in Canada. It's primarily been known to be a U.S. grower. The main fuel for this company has always been U.S. growth, which is actually why it's facing a lot of scrutiny right now because of the anti-money laundering issues it's facing in the United States, which has been one of its main growth verticals. I'll get to more of that in the bear case here, but overall, this is going to be a company that has a wide variety of products. We're talking residential, commercial, business, asset management. They have a brokerage. They're a very diversified bank, one of the largest banks in North America and the second largest bank only to Royal Bank in Canada. So the bull case would primarily be valuation here. This is a company that is trading at quite a big discount to what it typically does because of the U.S. anti-money laundering issues. There is a certain portion of its U.S. business that has been capped due to a bit of anti-money laundering scandals that the company got into over the last 10 years. So that has left it trading at very attractive valuations. And one of the main bull cases would be the fact that 55% of the company's revenue still does come from Canada. Now, they do have a large US base, but if they can grow that Canadian market share, that will ultimately lead to stronger growth here at home rather than down south of the border. Now, the other bull case would be the dividend. Now, I'm not one to focus too much on dividends. I am more of a total return investor, but the yield right now, the 5% plus dividend yield that TD Bank does offer is no doubt attractive because if there can be some valuation expansion there, then that dividend plus the total return could lead to outsized returns. The bank is relatively attractive right now because of the fact it is not expected to grow earnings in 2025 due to those anti-money laundering issues. Now, the one thing here is you might be looking at valuations and see that this company is trading at 17x earnings. It is the most expensive Canadian bank by quite a wide margin, but this is due to some one-off costs when it comes to anti-money laundering that are probably not going to be realized. There's not going to be a ton of further fines moving forward. So that PE is going to normalize. And the more important number to look at is that 9.5x expected earnings. This is a company that typically trades anywhere from 10 to 11x forward earnings. So we do have a big discount there. And if it can get the anti-money laundering issue sorted out and its US asset cap removed over the next 2-3 years, this could be a company that could provide outsized returns with the higher dividend yield and with the eventual rebound in earnings growth. Now, the bear case is obviously going to be the U.S. asset cap. U.S. regulators are very, very stingy when it comes to things like this. We have the asset cap on Wells Fargo that was put in place with them effectively creating fake accounts. So regulators hammered down on them. The asset cap was put in place in 2018 and it's still not removed. So there is the risk that Toronto Dominion Bank takes longer to get that asset cap lifted. And ultimately, they're going to have to spend more money in terms of improving their anti-money laundering situation and practices in order to get that cap removed. So if the cap lingers, this does kind of cripple one of the main growth avenues for the bank. And if this is a situation where this lingers, we could have slower growth in terms of earnings relative to the other big five banks, which ultimately could hit earnings per share. It could hit dividend growth. This has been one of the better dividend growth companies over the last while, and it could be impacted if earnings continue to be flat or grow in the low single digits. So that anti-money laundering situation is definitely the main bear case here. There's not much else to knock on this company for. It is an excellent bank. It is a outstanding operator. It's just caught up in a bit of regulatory issues that might impact earnings quite a bit. My overall thoughts on TD, I do feel that it's a pretty solid hold right now. The only difficulty here is that anti-money laundering issue. I tend to lean on the side that it's going to be relatively sticky, just like Wells Fargo's is. And if that's the case, I expect TD to probably grow earnings per share at the slowest rate out of all the big six banks. It's not that I feel that TD Bank is a bad company, a bad stock or anything. However, I would expect, again, if it lingers, for the other banks to provide stronger opportunities for investors. So would I necessarily be buying Toronto Dominion Bank right now? I would say no. If I owned it, would I hold it? Probably. I actually ended up selling my TD Bank. I believe it was in late 2023 or early 2024 after these anti-money laundering issues came to surface. And overall, I just think it's a great company that's at the mercy of US regulators who are likely in absolutely no rush to remove that asset cap. So everybody, hope you liked the video. Head down below, like the video, subscribe to the channel, grab that free report on those 3 stocks that are just absolutely crushing it over the last 3-5 years. It's absolutely free, takes a few seconds to sign up. And as always, head down below, drop a comment on what stock you want me to go over next, and I'll take the most popular one and I'll cover it. And as always, stay tuned for more great investing content.